Hello, and welcome back to the Macro Gamer channel. My name is Mark Hassingham, and today we're going to go over our weekly numbers for week number 8, and it's as of today's date, 9/14, which is Saturday. So let's get into it. So as of today, our portfolio's net worth is $162.70 as of 9/14, which is today's date. We have our portfolio weekly data. So you see we have a pretty good uptrend this week. We have a money weighted return of 2.29%. So we've had a pretty strong week this week. We have no net cash flow, so no cash came into our portfolio this week. We can see our starting value of $160.29 and our ending value for the week of $162.70. So we have a market gain here of $2.41. So that's all in 1 week, so that's a pretty good week. Normally getting 2% in a week is really good, or losing 2% a week is really bad. So we won't have big swings. So this is our portfolio weekly data. All right, so it's our weekly chart. You see a pretty strong uptrend on this chart. Pretty strong uptrend. Likely next week we won't have the same thing. Here's our portfolio monthly data. Now remember, when you see these big step ups like this right here, this is when the cash transaction goes into the account. So we auto deposit $10 every week into our account. And when the cash pile gets up to $25, then it auto deposits it into the portfolio, and it buys each ETF based on its percentage weighting. So this is roughly a 30% increase in the value of the portfolio, but this is not from trading. This is just the auto deposit. Our actual performance return is right here at the bottom. Again, our money weighted return. It's at 2.36%, which again, pretty good. 2.36. So our net cash flow was $30 this month. So the starting value on August 14th was $128.70. And after that $30 deposit, it went up to the ending value of September 14th of $162.70. We had our market gain of $3.22 and our dividend return of 46 cents. So it's our monthly. So we have our weekly, and we have our monthly. And then once we get to the third month in our investing, we will have a weekly chart, monthly chart, and a 3-month chart or quarterly chart, you can call it. So we can see different time frames and how it all shows like the length of time of our portfolio. So these are our portfolio weekly percentage returns. So again, this is a pretty good week. So we have our gold ETF here, GLD. It's up 3.48% for a gain of $1.67. And we currently still have it at a 30% allocation in our portfolio. We have our bonds ETF, our GOVT ETF, up 0.46% for a gain of 22 cents. And we also have that at 30% allocation in our portfolio. So remember, our gold and bonds comprise 60% of our portfolio. So the majority of our portfolio is in gold and bonds right now. Our US dollar ETF, UUP, just flat, 0. And we have it at a 15% allocation. Our commodities ETF, USCI, is up 2.74% for a market gain of 43 cents. We have that at a 10% allocation. Our S&P 5 equal weight 500 ETF, RSP, is up 2.68% for a market gain of 42 cents. And we have that at a 10% allocation. And our Bitcoin ETF, IBIT, which if you remember, we switched from the BITO ETF because the correlation with that ETF wasn't as good. So we switched to the IBIT. So we're up 11.94% for a market gain of 90 cents. And we currently still have that at 5%. Remember, Bitcoin being the most volatile asset in this portfolio, we have it at a lower percentage in our portfolio. So that was our weekly percentage returns. Now we look at our monthly percentage returns. And the allocations are still all the same, right? Between the weekly and the monthly, those haven't changed. So our gold ETF, the GLD, is up 5.19% for the month for a market gain of $2.18. Our bonds ETF, GOVT, is up 1.82% for the month for a market gain of 0.73% or 0.73 cents. Our US dollar ETF, UUP, is down 1.19% for a market loss of 0.28 cents. 0.28 cents. Just say 28 cents, sorry. Our commodities ETF USCI is up 0.71% for a market gain of 10 cents. Our S&P Equal Weight ETF RSP is up 3.99% for the month for a market gain of 55 cents. And our IBIT, we've only had a couple weeks in, so this is not a complete monthly return, but just for the sake of this video, it's up 3.56% or 29 cents. So we only did a couple weeks ago, so we don't have a full month yet. Once maybe the 2 or 3 weeks from now, it'll be a full month from there, and then we'll be able to see what it is on a monthly return. Remember, we switched from BITO to IBIT due to the bad correlation with ETF. So these are our monthly percentage returns. So pretty good week and pretty good month for this week, for week number 8. So both very good. We had no transactions this week for our portfolio. Now we have our Illuvium staking. So as of today, current price is around $40.55. We have a total value of $85.65. And we currently have staked 2.11 ILV tokens. And as you can see, we have our previous revenue distribution of 0.0053, and we have no current revenue distribution. So this was our first revenue distribution. We haven't received a second one yet. So this is week number 8, our Illuvium dashboard. We have our vesting. So we have our first stake. We have 1.32 ILV, and it unlocks in 316 days. And we locked it on July 27th, 2024. So we locked these for a full year, so we could get the weighting of 2, so we could basically get double rewards. And we're gonna do this for every stake that we do. And we do these about once a month. And we have our second, where we paid about $40 at the time of purchase to get 0.79 ILV tokens. And those will unlock in 344 days from when we stake them. And we locked those on August 24th, 2024. And probably around this time in September, maybe around September 24th, before or after, we'll have another stake that we'll add on. And we'll also be awaiting for of 2, which will take 365 days to unlock. And then during that time, if any revenue gets paid out to stakers, we'll receive our share of that. And again, as our Illuvium revenue distribution, week number 8, we have no revenue distribution to claim this week. So we have 0. So no revenue distribution this week. And we have no Illuvium or ILV transactions this week as well. So those are our weekly numbers. So now we can look at our charts. So as always, start with our best asset in our portfolio right now, which is gold. You can still see it in this uptrend since October 2023. We're already in September, almost going on a full year, still in this great uptrend. I've said this before, I said it again, there's no reason to sell gold right now. And we're literally at an all-time high right now. Right? We are at an all-time high in gold. So this is a great trend. This is why it's 30% of our allocation. There's no reason right now to sell this trend. If I ever see this break down, then, I'm going to, check it out, verify everything. But I'm going to say, okay, I'm going to bring it down from 30% to maybe 25% or 20%. I'm going to start reducing the position. It'll never be at 0. None of these assets will be at 0. That's not the point. We want to be diversified. But the highest allocation for any of my assets is about 30%, maybe maxing out at 35%, right? But really, I like to keep it at 30%. So great trend, strong trend, all-time highs right now. Gold's doing fantastic. GOVT, our bonds ETF. So remember, we came into this wedge pattern in the past, right? And then right around here in July, we broke out of it and we shot up, right? We had a strong uptrend to it. And you see it's kind of come back, but it's continuing up. So it's doing fantastic right now, also at 30% allocation. Now, I always bring this up. Right on a 5-year chart, because bonds have been, since the peak back in 2020 have been coming down, because that's when we started raising interest rates. Well, actually raising interest rates a little later than that, I apologize. But around the pandemic it started, then we started raising interest rates. And then it's kind of hit this bottom area, at least I hope it's a bottom area, and then it's begun to start coming up again. So we're trying to get in at this low uptrend right here where we can catch it at the bottom and get the gains going up. And so far, up until this point, so far, week number 8, we've been doing good. So again, gold and bonds both individually at 30% allocation, so a total of 60%. So very bullish on these two. Our US dollar ETF, so UUP, so it came into this wedge pattern, same thing, but then it started breaking down. So originally we had our dollar ETF a little higher, and our position reduced it down to 15%. Now the good thing about the dollar ETF is, because it's a currency ETF, it's less volatile than our other ETFs, so I can have it at a little bit higher weighting and it not be too problematic in the portfolio, because it won't have big swings. Not like Bitcoin as an example, it'll have big swings. Remember, in 1 week it was like up 11%. It's highly unlikely you'll see like an 11% change in this ETF in 1 week. Could happen, but highly unlikely. Right, so we have it at 15% and it's breaking down. So now, if I see any other asset possibly come up, I might reduce this down to 10%. So it's at 15%, I might reduce it down to 10 if it continues this downtrend. And again, we're waiting to see what happens with lowering rates. Again, why we're bullish on bonds right now is because the Fed signaled possibly September, I believe September 18th is the Fed meeting. We'll find out if they do in fact start lowering rates, which will signal the Fed pivot. Everyone thinks the Fed pivot was when they stopped raising rates. I disagree. The Fed pivot is when they go from either raising rates or staying at whatever level they're at to lowering rates. That's when we pivot. So if that pivot is coming, you know, the correlation of yields going down as the Fed lowers rates is bonds going up, right? So that's why we're heavy in bonds right now. So we're thinking, fingers crossed, thinking that's going to happen. We don't know. Nobody knows. I don't care what anyone says. No one can predict the market. So here we are on our commodities now, ETF, USCI, and I've added these red lines to highlight this downtrend that's happening. So we had this uptrend that was back here around December 23rd starting, had this big upswing, came up, and then it started coming down. So right around here in July, it started coming down. So we reduced our position. Originally it was much higher, around 20%, now it's down to 10%. So this might come back up some, it might come down. I've been watching inflation numbers, they've been coming down. So overall, I do think the commodities prices are going to come down as well. So if inflation goes back up though, then I might increase my position to commodities again. That's if inflation starts coming up, it's if I see commodities prices coming up. RSP, our equal weight S&P 500 ETF. We're still in this good uptrend, have it at 10%. As I've said before, you know, I'm not as bullish on the stock market because of how bad things are. As an example, you would never see gold in this strong uptrend at the same time stocks are in a strong uptrend like this. Usually gold is seen as a safe haven asset, or stocks are seen as a risk asset. So to see both a safe haven asset, a risk off asset, and a risk on asset going up at the same time is usually a bit of confusion in that. So that's why I'm less in my bond ETF, my stocks ETF. But I'm still, like I said, every ETF has to have a position. That's the point of this. So it's still at 10%, right? So still in the strong uptrend. It might break, it might not. If you look at it 5-year, we kind of peaked back here in January 22, kind of came down and up and went sideways. And then right around, let's see, right here in March of 24, we kind of still were on that peak and we started coming back up. So we'll see if it continues up. Maybe if something happens in the market, like gold going down or bonds maybe not going up as much, you know, maybe I'll put more into stocks. But as of right now, I think 10% is a good allocation. So I'm still not bearish overall on stocks, but very cautious on stocks. Then we have our Bitcoin ETF. And as you can see back here, it peaked in March 24, and it's been coming down in this downtrend ever since. Maybe we should make these lines red just to kind of highlight what this is. You know, this is a downtrend. Usually green's like how you see my candles are, green is up, red is down. So we're in this downtrend right now. Now, some people might think right now, because we're hitting around 60K and Bitcoin is coming back up, it might break through this. But again, going back to March 2024, it's been coming down. So, you know, Bitcoin, very volatile investment. Be cautious. That's why I have it at 5% in my allocation. I don't think it's I don't think it's going to come back up unless the stock market really starts coming back up, but who knows? We're going to watch it and see what happens. And those are kind of just our current portfolio allocations. So I'd like to go over some other stuff. Let's look at our Bitcoin ETF, or sorry, let's look at Bitcoin itself. Let's look at it on a 5-year chart. How far back can we go? Okay. So I think Bitcoin itself is, not the best asset. I think it's kind of a bad investment because of how volatile it is. And I kind of want to highlight that. Kind of like take a moment. When we look back here, let's get a 1-year chart. When we look back, going to, let's see, 2017 market, there was this, here we go, 2017, 2018. This is kind of when I got into Bitcoin, back here when it was around $1,000, and then it had this huge run up to about 20K, and then it had this drop, right? Almost got cut in half. So the volatility of Bitcoin is just so bad. This was a, 1,800% return, right? Which looks good on paper. You're like, wow, 1,800%, that's incredible. But when you look at what happened right after, the very next year, so now we're in 2018 to 2019, your price got cut down. So it dropped 80%. Right, now you might think in your mind 1,800%, you only lost 80%. You're not losing 80% of that 1,800. You're losing 80% out of the total 100% of your allocation. So you only have 20% left of your Bitcoin position, right? When you go all the way down, that's 100% and that's zero. That means you have nothing. Your position's wiped out. So of that 1,800%, you might have maybe a 300% gain out of it left, or a 400% gain out of it left. You lost so much, over 1,000% of what you earned. So Bitcoin is highly volatile, and I know people like to ride the Bitcoin train and think of how great it is and everything, but I think it's good as an alternative investment. It's a good asset, but long term, it's a lot of volatility, and not everybody is so adept at investing that they're going to time the bottoms and tops so well. Everyone thinks they're going to be a great investor, they're going to time the bottom and top, but that's not reality. A lot of people are going to FOMO in like this. This is on this 1-year chart around January. Let's see where we're at, right around here. This is when Bitcoin, the ETFs, the spot Bitcoin ETFs got approved. And look at this big uptrend right here. If we look at our measurement tool, so this is about the bottom right here. And then going up here, this was 85% gain. All right, so this is like the Bitcoin ETF kind of hype cycle right here. But look what happened right after. Once all the hype died down, we do our little measurement tool, come down, and this was like our low, kind of our lowest point at this point. Came down about 26%. So you lost 26% of that 85% gain. So you lost about half of it really. And people will say, diamond hands, hodl, hold forever, and all this stuff. I'm like, you have to sell at some point. You got bills to pay, groceries to buy, and all that stuff. But there's a reason why I have Bitcoin at such a low allocation in my overall portfolio. It's at 5%. If I go to these numbers, I have it at 5% right here. So just think about, I don't want to do that. Sorry. Just think about, just the volatility of it. It's too volatile to put all your money into it. It's too volatile to trust it. It's too volatile to think of it's the only thing you should be investing in. There's like a cult following in all of these asset classes I've noticed over the years. There's a cult following in gold. There's a cult following in bonds. There's a cult following in currency. There's a cult following in commodities. There's a cult following in stocks. And there's a cult following in Bitcoin and crypto. People just go all in on one asset and believe it's their lottery ticket. Quite literally their lottery ticket. They think, I'm going to buy and hold this. I'm going to make all the money and my life's going to be so much better. In reality, it never works out that way for the majority of people. It works out that way for the diligent investors, the smart investors, the ones that work hard, but most don't get that. A better strategy would be to diversify long term and get market gains over the long term. So we're doing this month by month right now. Like I said, when we get to the 3-month point, we'll have weekly, monthly, and 3-month data, and you'll see over the long term. And then the next big one I really would be the yearly. So we have to do 1 full year of this portfolio to show you that. And you're just going to see over time, just taking a diversified approach won't get you the biggest gains, but also won't get you the biggest losses. You know, ideally you want consistent long-term gains. Like if I can match the market going up, but not match the market going down, that's overall good. I don't need to beat the market. I just want to go with the market, you know? But like, I don't want to go with the market when it goes down. You know, I don't want to go on that 80% drop that Bitcoin has. You know, like I don't want these big drops. Like that's too much of my money being lost. So I would rather think about it having a diversified portfolio. You have gold, bonds, currency, commodities, stocks, and Bitcoin. Most people don't even have Bitcoin in their portfolio when they think like this. They would take this out and maybe have these other 5, maybe not even currency. You know what I'm saying? Like most people would just have honestly stocks. You know, they wouldn't even think about diversification. But like different things happen in the market, different cycles happen in the market. Something's always going up, something's always going down, but nothing's always going up forever. Nothing's always going down forever. You know, you can have things go bust for sure, but like nothing goes up forever. At some point, it's going to hit a peak and come down. Like if you look at the hottest stock that people won't shut the fuck up about for a while is Nvidia, right? Like Nvidia's like, oh, big AI play, big AI play. Well, it basically peaked right here, right? Peaked right around here, then it had this low point right here. Actually, I had this even lower point here. So this is a 28% drop. And the most recent drop was 26. So at the current price it's at right now, it's still 12% down from its high. Now my question is, are people gonna like buy and hold it and think, oh, it's never gonna go down, it's gonna keep going, this AI boom cycle is gonna just keep going forever? Like, does that sound realistic? Like, what were people saying? You know, look at this. This Nvidia chart goes back to 99, and then all the way here to 2016, it was basically flat. So if I were to get my measurement tool out and go from here to here, that's fucking 6,000 days. 6,000 days, this fucking stock company basically was flat. And then out of nowhere, we hit this upcycle. So realistically, do you think this upcycle continues forever, or eventually it peters out, it gets tired? You know, the AI narrative doesn't necessarily die, but it goes away, right? The cycle is going to change. Other cycles will continue. I'm thinking it's going to go down. If I put a trend line on it, I think it's going to be like this. If I like extend it out, it's going to go like that. So something would have to happen right here, you know, for it to break out. But again, I'm not optimistic on the market, so I ultimately don't know what's going to happen. I'm just looking at these charts and I'm like, this is clearly a downtrend, right? Hit a peak here, hit a peak here, hit a peak here, and it's those peaks continually lower, lower, lower each time, right? The only positive is this low here is lower than this one. So this is actually a higher low. So this is more bullish right here. So if I do from here, maybe something like that, we go into like a wedge pattern, and I'll make this one green. So that way people kind of get it. So this red line is like the bearish pattern. This green line is a bullish pattern. So people might think, what happens when we get to this wedge? Is it going to go boom? Is it going to go up? Or is it going to go down? You know, I'm thinking the overall market isn't probably going to make it. I think it's going to go down, but I could be wrong. You know, maybe the AI narrative goes 100 years and just never stops. You know, like I think it's unrealistic, but like maybe it could happen. I think what's more realistic is at some point this narrative dies, this cycle dies. You know, the AI market will go down, but it won't die. AI, I think, is an important tool. I think blockchain is an important tool. I think those are going to continue to gain market share and grow over time, but just it's not going to go up forever. It's going to be cycles of up and down, up and down, up and down. So this is why I diversify. We got gold. I fix my chart. We got gold, bonds, dollars, commodities, stocks, and Bitcoin. Right? I'm giving you several different things, right, to look at. Not just stocks, not just crypto, not just gold, not just bonds, like all of it. Look at multiple markets, create a diversified portfolio, hedge your bets, protect your wealth. That's very important. Protect your wealth. And we only have like 160 bucks in this portfolio, but that's mine. Right? My main portfolio, I got more, but like I created this portfolio to show people, you know, like you can make this portfolio. Like you don't have to have a lot of money. You can start with $100 and you can diversify across 6 different asset classes, and you can manipulate the percentages of each of those asset classes to give you a good return. Like I said, if I could match the market going up, Like, I'm good with that. I don't need to beat the market. I wouldn't want to necessarily be less than whatever the market's doing when it's going up, but I'm like, that's fine too, as long as I'm going up with it. If it's going up, I want to go up with it, but I would love to like match it. But on the way down, I don't want to match it. I want to lose less, because I'm always going to lose something. No one goes up forever. Nothing goes up forever, right? Like, you're always going to lose a little something. But like, it would be nice if I lost less than when the market went down, right? Because that way, when the market starts going up, I'm starting at a higher point, right? So it's easier for me to get up and going faster than the market, which came down further than me, right? And I know it's kind of like getting into like a big topic, and like, I don't have enough time in this video to get into it, but like, just long term, think about diversification. It's a hard concept for a lot of people. That's the real reason why I make this channel. Like, I'm like showing you an actual strategy, like what it would look like. You don't have to copy it, do whatever you want. If you wanted to, like, I'm showing you how I do it. But like, diversification long term, when you think years and decades in your life, when you think about buying a home, nice car, starting a family, going on vacation, all this stuff, like, you're gonna need to be smart with your money. You need to be plan well with your money. You're not gonna just wait around for a lottery ticket or, you know, government to send you big checks. You know, like, it's, you know, it's silly. You know, it's better to plan accordingly, plan long term, diversify, hedge your bets. So hopefully this was helpful. As always, I welcome comments, criticism, questions, anything at all. Let me know what you think. And every week we'll keep doing these updates. You know, keep showing everybody that I think, my personal opinion, this is the better way long term for the majority, for the average person. You know, if you're in the minority and you think you're the amazing investor and you're always gonna nail the bottoms, nail the tops and everything, you know, go for it. But I think for the average person, like, this is the better way to go. And because this is free and open on the internet, anyone can watch and learn. So I hope this benefits you, and I hope you keep watching, and I hope that long term, you know, this channel will grow and people will like the content I'm putting out and make comments and criticisms, because that way it just helps the channel grow. So as always, thank you again, and have a good day.